Welcome back to Next Gen Investing here on this Monday afternoon. It's time for Under 30, and joining us now is George Tsilis, Senior Markets Correspondent for the Schwab Network. And George, we're talking a show favorite, maybe just a George Tsilis favorite at this point, Joby Aviation. I think I have talked to you about this stock on this show at least 10 times, and it's making news once again. What's the latest headline we got here?
Well, I mean, we've talked about this because, this is a very interesting technology that's going to be available to passengers. Essentially, it's one of these companies, along with Archer and Blade Mobility, which I'll talk about again in just a second, but electric vehicle and takeoff landing aircraft. Essentially, these electric vehicle types of little helicopters or mobility aerial vehicles, which are going to be moving passengers for various reasons to places like airports. If you look at spaces like in the United Arab Emirates or the Arab countries, they've actually been making deals with Joby Incorporated because these are wide open spaces. But this is sort of the Uber of the skies. And we've talked about this company as well as its counterparty Archer in the past as a technology that is going to come to fruition at some point in time. It just comes down to the certification. And today there is another catalyst that is moving the stock higher by right now over 21%. Now, Blade Air Mobility is essentially a competitor of Joby's, but what ended up happening is Blade Air Mobility also has basically a medical logistics business, particularly focused on organ transport business. And so what they ended up doing was spinning off their air passenger business to Joby for about $125 million. So it gives Joby instant access to things like bookings platforms, operational certifications, as well as air traffic infrastructure routes that Blade already operates. And they were going to grow their business into the passenger air mobility space, but they decided as a business to focus on medical logistics. So both stocks are higher as a result of this. It really comes down to, I think, the price and the value. $125 million is a lot of money on an absolute basis, but relative to right now, a market capitalization of the business of Joby, and this is prior to today's move at around $14.5 billion. It's not that much to essentially take on. It's about 1% of that total float. So it looks like this is becoming more accretive for Joby as they get closer and closer towards consistent revenues. Right now, if you look at the trailing 12 months, about 100,000, and that's based on some licensing revenues they're generating, but they're not expected to launch their first air mobility campaign vehicle in the United States until 2026, to which point, right now, based on estimates for that year, include revenues of around $60 million.
Okay, so George, as far as Joby's balance sheet is concerned, I mean, is this an interesting move for a company that, to your point, that is not yet profitable, not yet really seeing full-scale operations, or is this part of the nature of growing, where they're going to have to make more of these big ticket purchases to continue to hopefully boost their operations? I mean, is this something that shouldn't maybe you be doing before you're profitable, basically?
Well, I think it makes a good sense right now, especially if you're looking to lock in, logistical routes. It's an access to a booking platform, so it gives them more access to technologies that they don't have to develop on their own. And then obviously Blade seems to be focused more on air mobility for medical organ transplant and maybe even for medical transport for patients. So for what it's worth, it seems to be working out. If you just look at the market reaction, both the stocks are higher from this news.
George, real quick.
But I will say this, you have to be mindful. Yeah.
I was going to say, if we wake up in 2 years, would you be shocked to see a headline that said something like Uber bought this company?
I wouldn't be shocked. To be honest with you, I think it's a possibility they do so because you have to consider the platform that Uber has. They have a network platform. So it may make sense for them to do that. I'm not saying it's going to happen, but it wouldn't be out of the realm of possibilities. But right now, let's just put it this way. With the price action up 300% over the last year, revenues $100,000, cash burn around $600 million per year. Relative to the market cap, the cash burn isn't very large. And so that's why I think the stock has been moving quite aggressively to the upside, contingent upon FAA approval of their technologies for passenger use.
Okay, yeah, I will be curious to see how this story continues to unfold. But nice move today. So at least for the start of this week, we will take it. Appreciate it, George. Of course, a frequent discussion involving Joby and George Tsilis.